Anthony Grasso here, bringing you financial news that you can use. In this particular video, I'm going to do a stock analysis on GigaCloud. Is it still worth investing in right now post-IPO after the huge jump in its stock price? Well, let's find out together. I'm going to go over a summary of the company, its product offering, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So this video is brought to you by Webull. It's an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. All right, so GigaCloud Technology, it provides an end-to-end B2B e-commerce solutions for large parcel merchandise. Its marketplace connects manufacturers primarily in Asia with resellers in the United States, Asia, Europe, and to execute cross-border transactions across furniture, home appliances, fitness equipment, and other large parcel categories. Now, the company was formerly known as Oriental Standard Human Resources Holdings Limited and changed its name to GigaCloud Technology in February 2021. It was founded in 2006 and is headquartered in Zhuhai, China. So let's go ahead and look at some of the news of the company right now. So the biggest news of the company is that it recently just went public to raise $36 million by offering 2.9 million shares at $12.25 at the high end of the range, with a price at between $10 and only $12 a share. Since then, the stock has shot up all the way near $58 a share. Now, this debut is a rare instance of initial public offering by a Chinese company in the United States as the two countries head towards a financial decoupling. Now, a decade-long audit standoff between Washington and Beijing is threatening to boot Chinese companies from the U.S. stock exchanges. The company said it's willing to change auditors if needed to comply with the U.S. law so it could avoid being delisted in 3 years. So they have basically 3 years to get listed and to abide by the auditing laws. So let's go ahead and look at some of the fundamentals of the company right now. So the stock is currently trading at $44.78 a share with a market capitalization, I would say, of around $1.5 billion. Yet that's right. The company has reported revenues of $432 million as of March 30th, 2022, with earnings of only a positive $8.2 million out of that $432 million of revenues. Now, the revenues have grown 32.4% over the past year over year. Historically, it went from $122 million in revenue at the end of 2019 all the way up to $432 million. Now let's go ahead and look at some of the valuation measures of this company right now. Because the company has positive earnings, its price to earnings and price to earnings growth ratios are the most appropriate valuation measures. It seems extremely expensive right now with a current price to earnings ratio of 155 times just about, or you know, depending on what the stock is right now, with the recent stock surge today. Now, looking at the price to earnings versus the industry as a whole, GigaCloud seems very expensive right now with the price to earnings ratio of 155 times. Compare that to the US online retail industry average of only 20.2 times. Now, looking at the profitability of this company, it drastically increased revenues year over year, but its current net profit margins of only 1.9% are lower than last year's that were 4.3%. Now, but they do have high quality earnings, though. Now, they do not pay any dividends, nor intend to pay any dividends in the future. And looking at the growth rates analysis, the forecasted retail industry annual growth in earnings is estimated to increase 47%. Now, GigaCloud had negative earnings growth of negative 41% over the past year, though, making it difficult to compare to the online retail industry average of negative 37%. Now, looking at the financial strength of this company, the short-term assets of $187 million exceed both its short-term liabilities of $100 million and its long-term liabilities of $115 million. It has more cash than total debt right now, and its debt is well covered by operating cash flows of 107%. Now, it earns more interest than it pays, so the coverage interest payments is not a concern to us. So I would basically say it has an excellent balance sheet with kind of a poor track record on the earnings growth. I would like to see them grow their earnings better in the future. So what exactly did the analysts say regarding this new recent IPO? Well, folks, I cannot find any analyst reports on this. There's no analysts reviewing this. I'm sure that's going to change in the upcoming future, but I could not locate any analyst reports on this. So my buy, hold, or sell recommendation on GigaCloud, here are my thoughts. Now, GigaCloud Technology is a leading global trade service in the B2B e-commerce marketplace right now. The company currently has $438 million in revenue over the past 12 months, and the company is one of the fastest growing large parcel B2B marketplaces in the world at the moment. To put things that in perspective, its revenues in 2020 were only $190 million. That's a huge step forward over the past few years. Even though they haven't been converting a lot of those revenues to earnings, I think they can improve that in the future. Now, despite this growth, the GigaCloud has faced a lot of obstacles on the way due to the COVID-19 pandemic, lockdowns, and other factors. The company is struggling with supply chain issues. Overall, the global B2B e-commerce market is expected to reach about $18.7 trillion by 2027. Moreover, the Asia Pacific currently holds the largest market share. This is definitely a great sign for GigaCloud as it continues to grow no matter how big the piece of the pie is. So based on all of that information, I am a bull on GigaCloud in the long run, but in the short term, I am a bear on its current stock price. It has already shot to the moon. It's drastically trading overvalued with a PE ratio of 155 times. In comparison, look at Alibaba Group. It only has 41 times price to earnings. Now, the stock price has disconnected from the fundamentals of the company at the post-IPO status of right today. It's basically the fear of missing out to actually get into the piece, but you sell this good news when it drastically goes up and you buy on the bad news. So at this point, I would hold off on buying until the news subsides over the next few weeks. I would target a buy-in price at around $20 to $25 a share once all the initial investors sell and take their profits for long term. Now, if they can keep growing at the rate they're growing right now and transform more of their revenues into earnings, I put a 12-month price target of around $30 a share sustained. But let's talk about the risk of investing into this company right now. There are uncertainties in economic conditions and their impact on the e-commerce industry, particularly for large parcel merchandise, could adversely impact their operating results. They generate a significant portion of their revenues by offering global end-to-end B2B e-commerce solutions for large parcel merchandise via their GigaCloud marketplace and by selling their own inventory through the GigaCloud marketplace to and through off-platform e-commerce websites such as Rakuten in Japan, Amazon, and Walmart in the United States, and Wayfair in the United Kingdom. Now, their business and growth are therefore highly dependent on the viability and prospects of the e-commerce industry, particularly for the large parcel merchandise market. Any uncertainties relating to the growth, profitability, and regulatory regime of the e-commerce industry for large parcel merchandise in the United States and other jurisdictions in which they operate could have a significant impact on them. Now, the development of the e-commerce industry is affected by a number of factors, most of which are beyond their control. Those factors include the consumption power and disposable income of e-commerce consumers, as well as changes in demographics and consumer tastes and preferences, the availability, reliability, and security of the e-commerce platform in general, the selection, price, and popularity of products offered on e-commerce platforms, and the potential impact of COVID-19 pandemic to their business operations and to the economy in the United States and elsewhere generally, and the development of revenues, fulfillment, payment, and other ancillary services associated with e-commerce, and changes in laws and regulations as well as governmental policies that govern the e-commerce industry in the United States. Now, the e-commerce industry is highly sensitive to changes in macroeconomic conditions and e-commerce spending trends to decline during recessionary periods. Many factors beyond their control, including inflation and deflation, fluctuations in currency exchange rates, volatility of stock and property markets, interest rates, tax rates, and other governmental policies and changes in unemployment rates can adversely affect consumer confidence and spending behavior on economic platforms, which in turn could materially and adversely affect their growth and profitability. In addition, unfavorable changes in domestic and international politics, including military conflicts, political turmoil, and social instability, may also adversely affect consumer confidence and spending, which could in turn negatively impact their growth and profitability. Their international operations are subject to a variety of legal, regulatory, political, and economic risk. But there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.